Hello and welcome to My Finance Teacher. And today we're looking at gold as well as the US dollar. As usual, we're going to start with looking at the US dollar, the daily chart of the US dollar index in front of you. And a couple of days ago, I mentioned that the recent low on the US dollar might have been an intermediate cycle low, since this intermediate cycle has been going on since early September, and it's now has been going on for 5 months. Generally these go on for half a year, so there is a possibility that this intermediate cycle has finished, which means there will be a strong rebound in the US dollar. However, over the last couple of days we see that the rebound has slowed down, and actually over the last day dollar is moving downwards, although insignificantly, and it has not gone through this resistance zone at the previous low, close to 90.8 on the dollar index. So based on this movement in the US dollar over the last couple of days, although this is not much sample size, based on this I am giving it more of a chance that the intermediate cycle in the US dollar is going to continue, probably into mid-March, where we're going to see another FOMC meeting. So what that means is, say I'm going to give it about 70% chance that the dollar is going to decline from here onwards for another few weeks. Although there is another unlikely possibility, maybe about 30% chance or less, that the dollar is going to continue its upward movement and it's going to break through this resistance zone made by the previous intermediate low. In any case, since I expect dollar to continue down with a greater probability, what that means for gold is I expect this recent low that we had a few days ago in gold to be our daily cycle low, and I'm going to probably expect gold to continue upwards, and there is, I would say, over 50% chance, maybe 60-70% chance that we're going to continue the advance of this intermediate cycle in gold. We've only been this intermediate cycle has only been going on for a couple of months, since mid-December. Generally they'll last for about half a year. Look at this one here. So it's still pretty likely that the intermediate cycle in gold is still in its advancing phase, which means there is, well, I would say 60 to 70% chance we're going to see gold break through this recent high at about 1370 over the next several weeks. Well, there is also a chance that this breakthrough above the recent high is not going to be anything significant. It's likely that gold will top anywhere between 1380 and 1400 over the next several weeks, and then start the declining phase of this half a year intermediate cycle. And the interesting thing is, it's also likely that the gold cycle will top somewhere around the FOMC meeting, with a possible expectation of an interest rate rise. Gold will have a great chance to start a declining phase of this intermediate cycle. So this is the more likely scenario that I see for gold, although there is another possibility as well. I would say there is a, say, 30% chance that this is a very short-term bounce up from oversold, not even oversold conditions, and then we're going to see a daily cycle low that gives us a lower low, followed by maybe another one like that. In that case, it means that we are already in the declining phase of an intermediate cycle. I would say there is a 30% chance of that. just in accordance with the probability that the dollar is going to rebound over the next several weeks or even longer. And a factor that makes me think there is a possibility of gold entering a declining phase over the next several weeks is what has been going on with gold miners. They have dropped quite a lot over the last couple of weeks compared to what happened in gold itself, and usually miners act as an indication of what might happen with gold itself. Nevertheless, I think in this case miners are simply oversold. Actually, we're just tangent to oversold conditions. I still think miners are basically oversold. There's been a very interesting reversal candle over here that was on Friday. Plus, we are stretched far below the 20-day moving average. So it's quite likely that miners are going to bounce up, giving us a nice chance for some gains here, which are probably going to outperform the gains in gold over the next several weeks, as miners have declined much more considerably and there is a greater force to push them higher, especially if gold is going to give us a higher high. If gold is going to give us a higher high compared to the end of January 1370, then miners might also give us a higher high. So in that case, if miners go from say 21.7 to say even at least 25, that will give us a nice 15% rally. Remember, this is not investment advice. However, I do wish you luck in your trades. Hit the like under this video and follow me on Steemit, where I post a little bit more often. Thanks for your attention.